Hi, and welcome again to another edition of Market Analysis for today, May 28th of 2024. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets, and this is a pre-recording previous to the U.S. session open. Memorial Day marked the unofficial start of summer, but the outlook for stocks doesn't look that bright. The market has long been able to rely on the artificial intelligence boom to push it higher, even as rate cut expectations have fallen back from March to September since the start of the year. But that looks to be changing. The AI revolution is still going strong, but its ability to prop up the market is dwindling. A big beat and stock surge from Nvidia has typically boosted the market, but not last week. Instead, it was overshadowed by robust economic data. If Nvidia's blowout earnings couldn't lift the broader market in the face of rate cut fears, then it's unlikely numbers from Dell and Marvell will be able to do this week. AI is set to take a backseat again in favor of the main event in a shortened trading week, the Fed's preferred inflation metric, the core PCE price index, is expected to rise 2.8% year over year in April, matching the March reading. While the central bank watches a range of data to inform policy, there's no denying Friday's core PCE print is a big deal. The probability of a September cut is 51%, according to CME's FedWatch tool. A harder than expected reading is likely to push expectations for the first cut to later in the fall. Or worse, still, for the stock market, it could raise the prospect of another hike. The latest Fed minutes released last week revealed several officials were willing to hike if inflation data showed it was necessary. Also, market participants would be eyeing a spate of another economic data releases, including U.S. GDP, second estimate. Now, Richmond Manufacturing Index, goods trade balance, initial jobless claims, wholesale inventories, pending home sales, crude oil inventories, personal income, personal spending, and Chicago PMI. The market has been sanguine about shifting rate cut expectations so far in 2024, but with stocks near record highs, AI losing steam as the catalyst, and rate hikes entering the conversation again, the summer months may become more frantic. And that old adage, sell in May and go away, might just start to come into fluctuation. So with that being said, let's take a look at what we can expect to see in today's market fluctuation. So yesterday, even though it was a holiday in the United States, we did happen to receive some fluctuation for market participants around the world, and we did see that the Nasdaq did fluctuate to the upside. It didn't quite reach that 19,000 psychological resistance level. Today, we kind of like almost kissed it, but not quite. We are in a short pullback or retracement from these levels. RSI is, it was getting closer to entering overbought territory. So let's see what could be the effect. Will that old adage start to be showing us that this is that sell in May and go away moment? So I am going to go with the perspective that based on technical analysis, we did have a close upward in the green on Friday. Yesterday, we also had a green. Could today just be one of those moments that the market could continue to with this trajectory, or could it be that if it has already done its correction, its pullback, its retracement, will it be time for it to continue to the upward trajectory? I am going to leave my resistance at 19,000 and change. I'm going to bring up my support to this double bottom that it was created last week. But it also gives a sign on a bullish entry. So I'm 50-50. Whether the market can continue to move up or will it just crumble. Or it could also just stay sideways. That's our three bets. I mean, doesn't really, I don't have a crystal ball to say which way it's gonna go really. So I'm gonna also leave my resistance at 53.60 for the S&P. Same token, I'm gonna bring up my support to that double bottom created last week. So let's see if also the market will may continue to make another move to the upside and reach that particular resistance level. Then we have the Dow. Well, Dow 40,000 has completely been not even touched, annihilated. Is the Dow is actually trading sideways. That is a perfect example of trading sideways. Um, the Dow, however, the Dow is looking to do a break to the downside, a breakout. So let's see if will that be the level. No, a break to now. So 39,000 can be initially our first target for the Dow. So yep, selling Dow. You could probably just sell everything. I don't know. Let's go with crude oil. All right, so crude oil. Crude oil, crude oil, crude oil. I'm looking at crude oil perhaps. Oh, this is nice. So crude oil bouncing off, from Friday low of about 76. It has started to create higher highs, higher lows. Right. So can we enter into a particular scenario where we can start to say, okay, let's go long the crude oil. So I'm gonna use that $80 marker, the psychological level. So yeah, I'm looking at nicely progression to the upside. So let's go long with, let's buy crude oil, Nat Gas, Nat Gas, Nat Gas. All right, so Nat Gas. Wow, okay. So Friday we had in the red. Yesterday we kind of had a nice green day. It's opened up with a small gap up. All right, so will today be just something of consolidation, and will you just start trading and consolidate between 260 and 250 and just start doing this for a little while? RSI is on the borderline. That could be the best bet. Let's take a look at gold. All right, so gold. All right, gold. Okay, so Friday on the green, Monday on the green. All right, so double bottom, move to the upside, creating. All right, so it's creating higher highs, higher lows, and so far we are in a trajectory to the upside. So I am gonna suggest buying gold. I'm gonna bring down my support to a double bottom created last week. I'm gonna bring down my resistance to 2400. That will be the target for the week. Let's see if by Friday it has been reached. Silver is another story. It has been more has more volatility, more volume into it. So I'm gonna leave my $33 target for the week. That same double bottom, and this is flattish right now. However, we did open with a gap down, as you notice here. It's a gap down. So move some pressure to the downside towards the $31 marker initially intraday. Could that be possible? Just and then just bounce off of it and continue to move higher. That could be one possibility. Let's take a look at copper. Well, copper. Okay, cool. So copper is actually looking to do a breakout. I think this is going to be a breakout to the upside for copper. $5 would be the target. So let's be let's be bullish buying copper. Bitcoin. So Bitcoin in the United States, there's already some more information, more laws being passed for Bitcoin, stable coins and whatnot. So I'm looking at Bitcoin to just move higher. Right now we're doing a pullback. It is entering also that particular setup where it just created equal highs, equal lows. A possible breakout to the upside is favored. Then we have the euro, the currencies. Let's see what the puppy is going to do today. Come on. All right, so, yep. All right, so Euro Cup is going to start next month. Will we see a stronger euro for the time being in summertime? That could be one reason. But also ECB looking to start cutting rates. Let's see, maybe perhaps that will be the case. So anyhow, if that's the case, let's be long. I'm looking still 109 for the euro. We haven't reached it yet. So 109 buying the euro. The pound is, well, pound has just moved higher towards the 128, so we are already basically there. I'm just gonna put 128 and a half for the pound, and let's bring this puppy up to yesterday's low. And okay, so that's it. Buying the pound. We are entering overbought territory in the pound. So the dollar index losing some ground, continuing to move into a lower fluctuation. So let's see at least if we'll meet this low or right around 103,900. All right, that's it for me today. Have a great trading day, and I'll see you tomorrow.